What's up, traders? Here Chris Capri, secondsguysforex.com. Got a trading video for you here today on set and forget price action trading, strengths and weaknesses. I wanted to do this video for a while because I think there is some confusion out there. If you look at a lot of the material that you see on it there's a lot of people that are either promoting set and forget trading as the bastion and the Pollyanna or the golden key to trading, and it's how you should trade. And then there are other people who are bashing it straight out. And I actually don't see it as black and white or one or the other. I see it as both and. There are strengths and weaknesses to set and forget price action trading. And for those of you not familiar with it, set and forget is where you've done your price action context analysis before you've made the trade. And then you kind of decide, okay, this is where I want to get in. This is where I want to get out. This is my stop loss. This is my take profit, and so forth. So, and once you've done all that analysis, then you're saying, hey, it's hell or high water. I'm either going to make money on this one and I'm going to ride it out to hit my profit target, or I'm going to ride it out until it hits my stop loss. Now, to be clear, most professionals, banks, institutions, hedge funds, prop traders are not doing pure set and forget trading, meaning that they are oftentimes looking to maximize the profit on every single trade. So if they're in a trade and they see that, hey, it's going against me, nothing is really folding in my favor, I don't really see anything that is I see the probabilities continuing to dwindle against me, they're going to get out. And if you read the books of hedge fund market wizards or any of the market wizards books, they'll tell you get out of your losers quickly, get out of your bad trades quickly, and hold your winners longer. And so that should tell you right there that they aren't doing set and forget. They do have a trading plan. They do have a fixed stop loss and take profit. Many of them do. Some of them don't. But the bottom line is that they're willing to be flexible when they can read the situation well and understand that the probabilities have either shifted more in their favor or further against them. So to be clear, most hedge funds, most banks, most prop traders are not doing pure set and forget. They're not just sitting there, they put out the trade and then they go play golf and saying, okay, well, I can only make $500,000 on this trade, and so that's all I'm just going to go for, when there's $1 million on the table. They're not sitting there doing that. However, you may not be the kind of person that can sit at a computer screen, trade for 8, 10, 12, 14 hours a day. That might not be available to you. So I want to talk about the differences between the strengths and the weaknesses so that you can get a much more clear picture about set and forget trading. You can understand its strengths, understand its weaknesses, and then understand and look at it and evaluate, say, hey, where do I want to be with this? How do I want to trade myself? Because there are strengths and are weaknesses. It's not one or the other. So that's what we're going to discuss in this video. And so I'm going to begin by talking about the strengths of set and forget price action trading. Now, I consider there generally to be three main strengths to set and forget trading. The first one is that it builds discipline. The second is that it increases emotional fortitude. And the third is best for busy people. So let me kind of dive into each one individually. How does set and forget trading build discipline? When you decide before the market hits your price, hey, this is what I want to do. I'm going to buy at this particular trading location here. Here's my stop loss. Here's my take profit. More often than not, trades will not beeline it straight for your target. In fact, if you look at most of your winning trades, oftentimes they oscillate between profit and loss, and oftentimes they take more time than you suspect. So I would probably say less than maybe 20-15% of the time, if you look at all your winners, the majority of them do not beeline it straight for your take profit. And what that means is that the majority of the time you can actually expect to be facing a lot of uncertainty and ambiguity about whether your trade is playing out or not, whether you made a good decision or not. The fact that you have committed to set and forget, saying, hey, I'm sticking to this whether it hits my stop loss or take profit, that builds a certain level of discipline to be able to stick through that and kind of maintain your discipline in your trading plan regardless of what the result is. And so that to me is a real positive. It's not that you are not building discipline if you're actively managing your trades. You are. It's a different kind of discipline that even though it builds some of the same skills in terms of discipline, it also tests you in other areas that set and forget would not, or would fail to test you in. So the first strength of set and forget trading is that it's going to build discipline. The second one is that set and forget trading can and will often increase your emotional fortitude. What do I mean by that? So as most of your trades, they oscillate between profit and loss, both wins and losses. They oftentimes will oscillate between profit and losses. Most often than not, they don't beeline it straight for your stop loss or straight for your target. What happens is that you're often going to experience emotions. And I've talked about this before in some of my prior videos about how to perform under pressure. Make sure you watch that video for sure. But that uncertainty around a particular decision you made often increases your emotional responses. It increases neurological activity. It targets more, or it increases the negativity bias that you are normally wired to do. And so as you experience kind of those highs and lows, and you've probably had this experience that, you've been in a trade, maybe it starts off in profit and you're thinking, great, I feel really good about this. I did a great job. But then all of a sudden it goes into the negative. You're thinking, oh, I did a bad job. And oh, this isn't right. And oh, this was a really bad decision. And then it goes back into profit. These emotional swings, as these kind of waves of emotion come and go, both highs and lows, positives and negatives, the fact that you have been able to stick to your plan and kind of ride things out builds an emotional fortitude and IQ that, hey, I can manage these emotions and I can learn to reinforce the right habits. So there is a strength in set and forget trading that as you kind of ride these waves, that you build your emotional IQ and fortitude. The other third strength of set and forget trading, in my opinion, is that I find it generally better for people who are really busy, people who got full-time jobs, maybe you got kids, maybe you got other responsibilities outside of work. If you only have a couple hours a day, you really don't have the time to manage your trades. And so, or you have less time to really kind of get, a read on the market, see all the different sessions, get your finger on the pulse, kind of see the changes. And so because of that, if you only got a couple hours a day, I lean towards recommending set and forget trading, at least in the beginning. There are situations as you evolve your skill set and as you become better at reading price action in real time, I actually suggest abandoning set and forget, but that's something that we can talk about later. So if you are a busy person and you are just starting out and you don't have a whole lot of time, this would be my recommendation. So these are the three general strengths for set and forget trading. Now, as I said before, set and forget trading is not the be all end all. It's not the holy grail. It's not the best thing in the world, and it's not the worst thing in the world. It's both. It has its strengths and weaknesses. And so now we're going to talk about some of the weaknesses. The first is that set and forget limits and can reduce your profit or increase your losses. What do I mean by that? So remember how I was talking about earlier in Market Wizards, a lot of them are talking about, hey, get out of your losing trades early. Get out of the bad trades early. Don't let it go for the full loss. Most professionals are sitting there looking at this saying, hey, wait a minute, nothing in this trade since I've gotten in it has shown me that this is going to evolve in my favor. I've seen these patterns thousands and thousands of times again, and generally means that it's going to go down and it's going to hit my stop loss. So as you build up your real-time price action skills, you're able to see these kind of trades that are going to fail in real time and get out of them before they do. And so that has an advantage. If you're able to save yourself an extra 0.5R, 0.25R, over a couple trades, that means a lot, but over hundreds of trades, that is a massive advantage. And so this is very, very important for you to understand. Also, on the flip side of that is that set and forget actually can reduce your profits. What do I mean by that? So I'm going to show you actually a real-time example of a trade that I took and that I actively talked about in Twitter. So here is my Twitter post, and it's middle of June, and it was a trade that I've been involved in on dollar yen. I've been looking to short this for a long time. I got in on the trade here, and I posted on June 15. I said, just lifted my limit on dollar yen short from 105.15 to 103.90. So I was short, and I was already up about 540 pips on this one here. And so I had a limit at 105.15. I've now moved it to 103.90. And I said even here, may hold for a 101.50 move. Now, here is the actual chart below. And so I've been short since around 111. And this is a great, if you're in my course, you'll recognize this corrective, impulsive, corrective structure. It's a classic price action pattern you need to understand. BOJ comes in, pair drops 85 pips in 1 minute. If I had just had my original target of 105.15, then, and I wasn't reading the price action in real time, then I would have got it at 105.15. But instead, I was reading it in real time and said, hey, this structure suggests it's going to go down. So I lifted the limit ahead of time, and it ended up resulting in a very profitable move, much more profitable in my favor. So 105.15, and here we are, 104.67. So at that point, I was able to grab about another, I don't know, was it 50 or 60 pips? And so that added to more of my bottom line. Here's the follow-up Twitter post on that one. The next day, just lifted the limit again on my live dollar-yen trade, again to 101.15. So I originally I moved it to 103.90 from 105.15. Now it's at 101.15. Now I'm currently up 660 pips instead of 540. That's an extra 120 pips. So how does this relate back to set and forget trading? If I was a pure set and forget trader, then that 120 pips wouldn't be available to me. I hit my target, I'm done, that's it. Hey, I'm gonna go play golf or something like that. Instead, I was reading the price action in real time, and it was communicating to me, and here's the actual copy of my trade results so you know it's a real trade. So I was actually reading it in real time, and I'm looking at this and saying, hey, the probabilities are heavily in my favor that this is going to fall further. I'm going to keep lowering my limit until I see that the price action in real time is shifting in terms of momentum and the context is changing against me. So that's an extra 120 pips when I was already up 540. That's an extra 20% gain of profit on that one individual trade. On one trade, that is a decent amount of profit, but on hundreds of trades, that is a massive difference in terms of your account balance. And since you're going to be making hundreds and hundreds of trades over your career, that will add up. Now, that doesn't mean that every time you lift your limit, you're going to make more money, you're going to win some, and you're going to lose some. But if you learn how to shift the probabilities in your favor and really read the price action in real time, this can be the difference between making 20% on a year and 30 or 40% on a year. And that adds a massive, massive profitability to your account. The two accounts over time will never be the same. They won't even come close. The person who's doing set and forget will have limited amounts of profit, and the person who's managing it effectively in real time is the one who's going to bank more in their account. Now, another really good example has to do with poker. And if you ever heard my lessons or seen my blog posts, poker is something that I suggest studying as a trader because they're so similar. It's a parallel skill. You build poker skills, and they're going to transfer over to trading. And so if you think about professional Texas Hold'em players, they're not sitting there with their hands thinking, okay, I only want to make 2 times my bet on this one here. They're looking at every single hand and saying, how can I get the maximum amount of profitability out of this hand? And so to show you a great example of this, one of the most kind of popular and kind of classic examples of this, and really just an amazing hand, is a situation where 3 players are going heads up pre-flop. Lewis, who's from the UK, has pocket queens. The guy in the video here, Robel, has pocket 9s. And Timoshenko, a really good Ukrainian player, has pocket 2s. So they're all in the pot pre-flop, and they have all match bets, and so now they're going to see the flop. Watch what happens here. And this guy Robel here, by the way, he's already on tilt, but watch what happens once the flop comes.
I think the pot's going to be big. I just have that feeling. All 3 players have pairs. That's something you don't see very often. Pre-flop.
Button in the blinds.
Oh! It's got queen, 9.
Oh my God.
Goodbye, Andrew Robel.
Okay, so Robel's this guy in the video. Pre-flop, he had a really good hand, or at least a solid hand, and he probably thought he had one of the better hands out there. He was about, pre-flop, he had about a 15, 16, 70% chance of winning. But now the flop comes out. He has pocket 9s pre-flop, and the flop comes queen, 9, queen. He has a full house. He is thinking he has the absolute best hand on the table, and rightly so. The probabilities of somebody having a better hand in the situation are probably 1 in several hundred thousand. So he's thinking, okay, I probably got the best hand here. Timoshenko completely drawing dead on this one here. And so he's got both of them, him and Timoshenko, Roble and Timoshenko got a 0% chance of winning. Lewis, on the other hand, this guy on the left here from the UK, he had pocket queens. He just hit quads. He mathematically cannot lose this hand. He flopped the nuts. And so what is he doing over here? He's looking at the other two players thinking, okay, I got the nuts. Now I got to strategize. How am I going to get the maximum amount out of this hand? Now, Roble here, thinking he's got the nuts, is thinking heavily in terms of how he's going to bet. He's not sitting there saying, okay, I'm only going to make 20,000, 50,000, 100,000 on his hand. He's going through all these different scenarios on his mind on how he can make the most out of his hand. Look how much time he takes to think about this here.
It's really, really hard. They're both trying to figure out how can I get all the money in. And by the way, Lewis is thinking he has to be bluffing, right? Because when you have quads, you have all cards locked up.
Roble leads right out and bets a full house.
Playing it like...
Well, that's something I would never do in this spot, to a pre-flop raiser.
Okay, so Timoshenko folds here, and Lewis, who knows he has the nuts, is now, again, running through all the scenarios in his head. How can I get the absolute maximum amount out of this hand? And this is a skill that is the difference between set and forget and someone who is doing trade management in real time. The person who's doing set and forget is going to limit their upside, and the person who is actively managing their trades in real time and reading the price action in real time is the one who's going to, more often than not, with the right skills, get more profit out of a trade, the exact same trade that a set and forget trader is. Now let's go and take a look at how long Lewis, knowing he has a 100% chance to win this hand, is going to decide upon his bet size here.
Pre-flop raiser. I'm going to take one stab to bluff at it. Now, obviously, Lewis is thinking he's died and gone to heaven here or something. He just can't believe.
But he's
what's
also
happening.
thinking it's got to be a bluff or an ace-9. It just... So
you're just going to call. You're never
yeah,
gonna
he's
raise.
never going to raise. He's never raising this. I mean, it would just be a horrible play.
Until he's last man, last action, probably before he's going to get any bets in this pot.
Yep. And look at him.
Continue to throw the rope.
These guys are just incredible.
Well,
I mean...
Okay, so what do we see here? We saw at least 20 plus seconds when it normally, on an average, it takes a poker player between 5 and 10 seconds to make a decision. He's doubling the amount of time, and he's looking over at the chips on Roble thinking, okay, how big is this stack? What's the texture of the flop? And how can I get the absolute maximum amount out of this hand? This is the kind of mindset you need to have as a professional trader. And so this is what hedge funds, this is what prop traders and bank traders do. They look at this and say, hey, how can I make the absolute maximum out of this hand? Are the probabilities in my favor or are they against me? If they're against me, I'm going to be getting out. If they're in my favor, then I'm going to be getting as much out of this trade as possible. Why only make 540 pips when I can make another 660 or 700 or 800? That's all going to add up to a massive difference in profitability and your account over time. So point number one in terms of the weaknesses is set and forget. It reduces your profit and it can increase the size of your losses. That is one of the weaknesses. Number two is that you're actually going to get weaker. You'll have weaker real-time price action skills. So what do I mean by that? If you have gotten into a trade and you are only waiting for the stop loss or take profit, then you're not really doing anything else after that. You're just kind of letting the trade do what it's going to do. You're looking for other trades. But when it comes to that individual trade, you're not reading the price action in real time. You're not doing any analysis, and you're not learning how to kind of analyze different structures and understand how the price action is evolving in your favor, against you, or is it neutral? And so because of that, you don't build real-time price action skills. When it comes down to it, a set and forget trader will have much weaker real-time price action skills than someone who's working with every trade and trying to get the maximum amount out of each trade, because there's more analysis, there's more patterns, there's more bars you're going to see, and thus, therefore, you're going to have much more exposure to a wider variety of situations, and you're going to build your skills for that. So that is a weakness of set and forget. The third weakness is the mindset and the mental limits. What do I mean by that? So if you have to go through situations where you limit the amount of profitability and analysis and engagement you're going to do in a trade, then you also kind of create this mindset of handling lesser scenarios and limiting your upside potential. And so because of all, it kind of akin to point number 2, through all the different situations that you will go to and you'll experience as a trader, oh, well, I had a plus 2R target and I exit for plus 1.5R when it ended up going to my plus 2R target. So you're going to go through that experience and see the difference in how your different actions worked out over time. The same thing is that you're going to have trades where you're going to sit there and go, wow, I was a set and forget trader and I got out for 1R, but the price action, everything was telling me in real time that this thing was going to hit it from, the moment it entered. I should have got out earlier. You're never going to get exposed to those situations. And so because of that, you're going to have a lesser amount of skills, situations, and environments that you can handle because you haven't kind of put yourself in a wider variety of situations. And so the person who has experienced more situations, just like the poker player who's experienced more different hands and unique situations, they're going to be much more adept when things get really challenging and the pressure really mounts than the person who just says, I got pocket aces, I only want to win 2 times my initial bet, and that's it. There's no development after you've kind of set your stop loss and take profit. Other than the things we've talked about, there is no further development in that. So you end up reducing the mindset skills and capacities that you have by doing set and forget, and you also create mental limits. I've often seen a lot of traders that will say, hey, I made my plus 2R on the day, and so I'm cutting it for the day. A poker player never looks at a table or a hand and says, I've made 20% profits of my hand this turn, I'm just going to call it a day. No, they're always looking at how can I maximize every situation. So you have to understand that there are weaknesses to set and forget trading, and these are them. And so this should hopefully give you a different perspective that it's not the be all end all, and it's not the worst thing in the world. It's not, if you do it, it's not going to make you a bad trader. And if you don't do it, it's not going to make you a good trader. So you have to understand the differences and the full spectrum of what this is. So with that being said, I hope this video really kind of gave you a different perspective on set and forget price action trading. That, because if you look at most of the comments, a lot of people are saying this is the only way you should trade. And some people are saying you should never trade like this. And to me, I don't look at it as clear as black and white. I see the benefits and I see the downsides. And so now that you've kind of seen both sides of the spectrum, hopefully this can give you a more complete context to be able to evaluate where do you want to be in this, what is best for you, and how can you kind of go about your trading so that it matches your style, your personality, and it's also most workable for you in your life, because it has to be workable for you in your life. And so I'm hoping that this really gave you a different perspective. I hope it kind of opened up new ideas. I hope it provoked questions and thoughts and challenged your ideas on it. And I hope it's going to force you to really reevaluate it so that you don't look at it in such a black and white fashion. So with that being said, I look forward to your comments and questions on it and your thoughts on this. Share with me what you think about it. What do you do? And have you noticed the differences? And if you like this video, make sure to give it a thumbs up below and share it with anybody that you think can benefit from it. Also, make sure to leave comments below and your suggestions on what kind of lessons you would like a future video on. And lastly, in the description, you'll also see a link to the video I talked about how to perform under pressure. This is a great video for you as traders because one of the things you're going to often be experiencing is pressure. Set and forget trading doesn't mean that you're not going to experience pressure, emotions, or highs or lows. It's a complete falsity and misstatement, or it's a complete misdirection to say, hey, I'm doing set and forget, so there's no stress. It's complete BS. If you look at yourself, you've made tons of set and forget trades and you still experience stress. And that's a real thing. So it's important that you understand all these things. So I look forward to your comments and questions. And other than that, make sure to check us out on secondskiesforex.com. And I will see you on my website, and I'll see you in the next video. Take care, everyone. Dr. John and Julie Gottman out of the Love Lab are able to do something quite amazing. They have been studying married couples for the last 30 years, and they found something quite unique, which is that they can predict with 93.6% accuracy whether a couple will divorce or not. And when they look through all the different variables and the evidence, they found one thing was underpinning this high accuracy rate. It was how the couples have performed and how I teach my members to trade in the advanced price action course. So before we get into the trades, I just want to show you right here. This is a live account. I'm trading with my own money right now. This says real. If it was a fake account or a demo account, it would say demo. So just to let you know, I am trading with my own money. And as you can see, these are moving in real time. Everything matches here, 109 pips, 109 pips, so it all matches. And so I'm in the market live right now. I've been in since December 3rd, late last week. So this one is actually